Ignace Kofi is a small cocoa farmer in Côte d'Ivoire. With the profits eked out farming his 36 hectares of land, he supports himself and 15 family members. Cocoa may have bucked the recent trend of plummeting commodity prices, which has badly affected many other African countries, but life is no easier for this small-scale farmer.
It's not easy to prosper in cocoa production. The conditions are difficult. Support for production is not at all organized. There's no financial program for cocoa, even though this sector supports the economy of this country.
Côte d'Ivoire produces around 40% of the world's cocoa. The sustained price of the commodity has helped in part to protect the country from the worst of the global slump. Other countries in Africa have been less lucky, and growth in the sub-Saharan region is forecast to fall sharply from over 5% last year to a projected 1.5% for 2009.
That is, of course, the consequence of falling commodity prices for a significant proportion of Africa's exports and falling world demand generally.
Côte d'Ivoire is also receiving outside help from the International Monetary Fund. This factory in the capital Abidjan recently hosted a visit by the head of the IMF, Dominique Strauss-Kahn, after the fund approved a loan for the country worth more than $550 million under the fund's Poverty Reduction and Growth Facility. And it's not only Côte d'Ivoire which is turning to the IMF. The East African country of Tanzania, which recently played host to an IMF-organised conference, requested and was granted a 12-month loan worth more than $330 million. This loan was agreed under the terms of the so-called exogenous shocks facility. Since the outbreak of the financial crisis, IMF officials have been in deep discussions about how the fund can respond more quickly to support low-income countries facing this downturn. The shocks facility is one result, a lending vehicle tailored to meet the needs of low-income countries which have been battered by external forces outside of their control.
The fund has been very quick to put in place a facility that is more flexible, that allows us to respond quicker and with less conditionality to urgent demands for financing that are emerging from the crisis.
Less conditionality and more flexibility in IMF lending, that was the message which Fund Chief Dominique Strauss-Kahn emphasized when he addressed students during a trip in May to the Democratic Republic of Congo, another recipient of loans under the exogenous shocks facility. Mr. Strauss-Kahn's next stop was to a health centre which cares for children and women living with HIV. Even as the IMF lends more, it also seeks to protect the vulnerable from the worst effects of the crisis. During his visit, the IMF chief handed over a token donation to the clinic. But at the level of the continent, new IMF lending to sub-Saharan Africa has already topped $1.5 billion and is expected to reach more than double the level of 2008 by the end of this year. The hope is that with the fund's financial and technical assistance, Congo and other low-income countries will be better positioned to face the contagion of the global economic downturn.